Welcome to the Real P&L show, where I share my real P&L on 3 accounts and share my proprietary Safe Whale trade system for free. I want to make sure you guys can hear me okay. Put it in the comments if that would help me out. Also, be sure to post any questions you might have earlier rather than later so I can get to those. Sometimes I get questions kind of towards the end of the broadcast and I can't get to those because they come in late. I think you guys are on maybe a 5-second delay, or not 5, but maybe 2-second delay. I don't know. Charles says you can hear me okay. I appreciate that, Charles. Thank you very much. All right, let's get into what's going on or what happened last week. Here's the Earnings Edge account, and I did not make a trade. There's nothing that fit through the filters, and if there's nothing that fits through the filters, then I'm not going to make a trade. So if it's not worth making a trade, I won't do it. You can see all the trades that I've made so far this year, and you can see my net lick here, 10,342. And let's put that up on the spreadsheet here. I think it's already in here. Yeah, 10,342. You can see since I did my update in 2022, my record's 29, 20, and 8. Average win 704, average loss 579. So the winners, I'm about 60% win rate, but my winners are higher than my losers, which makes it come out ahead here. You can see how I did in 2022, 63% versus 19. 2023 underperformed just a little bit here compared to the S&P 500. And so far this year, well, let's see what the SPY is trading. 554.86. Whoa, is that pretty big? 554.86. And so the market is up almost 17% in 2024. So it's up pretty good. I'm up 8% with this system. Overall, though, since I started trading it, up 106%. So I've doubled my money since 2022. And since 2022, the market's only up 17% over that last, what is it now, 2.5-year period? Okay. So that is the Earnings Edge. Like I said, there's nothing that fit through the filters, so I did not go. Usually when we're coming into earnings season, that is a good time to have a lot of choices and a lot of good picks to use. And then when we're coming out of earnings season, sometimes there's not very many that fit through the filters. Okay, let's look at the Premier Level 5. Remember, the Premier Level 5 is the S&P variant, which means that it's tied closely to the S&P, and my goal with this variant is to outperform the S&P. And let me just show you my account. I can't show you the whole screen or else it'll show my account number. So 30,473, that's the balance. 30,473. So I'm going to put that in there. 30,473. 30,473. Okay, so you can see how I'm doing versus the S&P. I started this variant here on July 16th, 2024. And you can see I'm up 1.5%. The market's down 1.5%. So you can see I'm already outperforming the market. I got in on July 16th at the peak, right? At when the SPY was trading at 563. So even though when I got in, the market is down, I'm outperforming the market here. So you can see that this PL5 Pro S&P variant is a really good variant because it outperforms the S&P 500. And that really is one of my main goals. So I have this account specifically set up to outperform the S&P 500. And that's what it's doing. You can see here, and I'm actually up since July 16th, where the market is down. All right. So that's what's going on with a couple of the accounts. Let's go into the Safe Whale account, which I believe is this one. Yeah, 64.19, 64.20. Let's put that in the spreadsheet here. See how's that going. 64.20, 64.20. Okay, so just pretty much at break even for the year. You can see underperforming this year. 2022, how the safe wheel do? Outperformed by about 40%. 2023 underperformed here, but again, I got about one half drawdown on the risk adjusted returns. Still underperforming here, but much better. You can see that since 2022, I'm up 28.4%. The market's up 17%. I can't say only, but I don't think that's that's probably not indicative of what the market does. Isn't it supposed to go up maybe 9 or 10% per year? Over the last 2.5 years, it's up about 17. So it's kind of underperforming its normal performance metric. But you can see how the safe wheel is outperforming 28% versus 16 since 2022 with a lot less drawdowns. And I've traded the safe wheel account right in front of you here. All of my trades, except for the ones I make on Fridays, all of my trades have been made right here live on YouTube. And let's see what I need to do this time. So it looks like JD, I think they came into earnings last week, and I owned 100 shares and I sold covered call, and I got called away, which is good. That means I made some money. And if I look at where I'm at now, what do I need to do? I have my hedges in place. So I like to have my hedges in place, and then I want to run the traditional wheel. That way I'm not worried if the stock goes down significantly. It's actually kind of a good thing. So the safe wheel is really good because, the problem with a wheel strategy is when the underlying that you're using goes down significantly, that's when you have problems. But if you do the safe wheel, that's not a problem. Okay, so I have this $21 put. Let's see. I have a couple questions with this right here. First of all, do I own 200 shares? The answer is no. So that's one question. If I did, I would see if this put hedge paid off. But I don't own 200 shares, so I don't need to look at that. The other thing is how many days left. If this is under 100, this thing will depreciate too fast, but it's 123, so I don't need to do anything. And then the other question is, how close am I? How close is this strike price, this $21 strike price, to the actual price of the underlying? So I want to be within 70%. So what I do is I take this $21 and I divide it by whatever the price is, 29.49, 29.49. And I'm 71%, so I'm good. If it was under 70, I would have to move this put hedge up closer, but it is close enough to protect, right? Because this is a hedge. I need it close enough to the money to protect the position, and it is. So it's within 70%. So that's good. And then I have my $33 call. This call right here is just a little $5 call that I buy just in case the price of the underlying shoots up significantly, and to protect this put hedge, because the value of this put hedge could drop dramatically if the price of JD goes up significantly. Say it pops to $40 or $50. This put hedge would be worth almost nothing. So I have this call right here to cover that $33 strike call. Costs $5. Pretty much $5 a week is what I spend on it, maybe $6. Okay, so I have my hedges in place. So now I'm going to run the traditional wheel. And what am I going to do? I'm going to sell a put right to open. How many am I going to do? Well, if I have between $5,000 and $10,000, I'm going to run. I have this sized to where I run 3 put hedges, and then I run the wheel with one contract. Right? If I was between, let's say, $10,000 and $15,000, I would run 2 contracts on the wheel, and I would have 6 put hedges. So everything is sized properly here. So I've done all the work and all the back testing, everything to size this out properly. So I'm just going to do 1. So I'm going to go here to the trade tab. Make sure that I'm in the right underlying. And I'm going to do it in the near term, 4 days. So today's Monday. So on Friday, this option will expire. And what I want to do is sell a put. And I want to get at least 29 cents because it's trading around $29, $30. So this one here, what I typically do is see if I can get this 30 cents here, and then I come one back. So I'm almost going to be selling here at the money. So that's the one I'm going to sell here. So mid price is 52 cents. I'm just going to sell one, collect maybe $50-ish. Okay, that filled. So I collected $52 because my goal and the way the system's set up is to always collect premium every week. That's the goal with any wheel strategy, right? Is to collect premium every week. But the problem with the traditional wheel strategy is when the price comes down and you can't sell a covered call, because if you do sell a covered call with any kind of premium, you get called away, you lose money. So you want to always be selling premium, but with a traditional wheel strategy, you're not selling premium, right? You're not always selling premium. You get caught in a stock and I call it like a wounded soldier, and you're just sitting there with nothing. You can't get any premium. Well, with the safe wheel, you can always collect premium. That is the goal, and that's the way I've built the system, to always be collecting premium. Okay, so that's pretty simple there. Just sold that put on that. Okay. All right. Let's see if there's any questions. I don't see any questions for today. I think we're when it's in the middle of summer, there's a little less engagement in the market. A lot of people are on vacation and things like that. Let's see. Xavier, where do I learn more about your wheel strategy? Any tutorial videos? Yeah, every week I do a live stream. And so if you just go through my live streams, you'll see me actually trade it live. And that would be a really good way to learn it. Also, there's a link in the description if you want to actually buy the course, because there's going to be scenarios that I haven't come across in my live stream that are in the course, because in the course is every single possible scenario that could happen. So if you want to have the flow chart to tell you exactly what to do when in every scenario, then that would be the course. It's more of the fast track. Or if you want to learn more, just go through the live streams and you'll see, you'll watch me trade it live, and you'll see how I explain everything that I'm doing and why I'm doing it. Martin says, hi, how's your experience using IB? Do you use Trader Workstation or mobile or client portal? I use Trader Workstation. I like Thinkorswim. I don't really like Trader Workstation that much, but the fact is that the commissions are so significantly lower on ES/ES. I mean, it's like 85 cents a contract versus like $2.85 a contract. I mean, the commissions are so significantly lower. So that's the reason why I'm using Interactive Brokers. I used to use Thinkorswim, but I can't pay those commissions. They're just too high when it comes to just /ES, the futures. Do I like the platform? It's a little clunky for me. It's not as intuitive. I can use it. I can, I'm using it. I understand it. I just don't like it as nearly as much as I like Thinkorswim. And do you use Risk Navigator to analyze your positions? No, I use OptionNet Explorer, which is a third-party separate back testing and position software. So I can back test it, but I can also see my positions. And I use OptionNet Explorer for all of that. And it's just way more robust, way more intuitive, way better as far as managing my positions. I use OptionNet Explorer. And then I just go into IB and to execute my trades, or I go into TOS to execute my trades. Steve-O says, on JD, I'm surprised you didn't go one step further out of the money at the 29 strike and get to $30. Sometimes I do that. And I could have done that. And I like to come back one and collect a little more premium But yes, I definitely could have went to that $29 strike for sure. And I believe that sometimes in the past I've done that. So definitely uh, it's an option. It was kind of like 50-50. I almost went that way, but I didn't. Xavi says, can this be done on a small $2,000 margin account? I have this set up for a minimum of $5,000 account with margin, right? So you have $10,000 in buying power. And so I've done all the sizing and everything that's based on a stock that's between $20 and $40. So all the back tests and everything have been done based on a $5,000 account. If you might try it with a $2,500 account, but now you're going to be dealing with a stock that's maybe between $10 and $20. You're not going to be collecting very much premium, and so it's not quite as viable. It's doable, and that would be a good way if that's all you have and you wanted to learn. But it would be more of a learning experience if you're going to be using a little less money than 5,000, because you just don't get the premium for those stocks that are trading between $10 and $20. There's just not a lot of premium there. So 5,000 is pretty much the minimum, unless you want to have a good learning experience. I mean, obviously, it's a good learning experience with 5,000, but you can see the results that I've gotten with the trade, which has outperformed the S&P 500 over the last 2.5 years. Javi says, thanks. Okay, you're welcome. All right, I am looking for, see if there's any more questions. If not, I do want to say one thing in parting. One thing that I always like to say, and one thing that it's the purpose of my YouTube channel. It's to get these instructors out here to share their P&L. It doesn't make any sense to me that people would learn from someone or buy something from someone expecting to make money because that's what they were promised, but they haven't seen that guy or that person make money. They haven't seen their P&L on a consistent basis. They haven't seen their portfolio P&L on a consistent basis. So how do you even know if this guy's profitable, but he's over here telling you that you can make tons of money if you follow or do what he does? It just makes no sense to me. And so if you guys hit the like button, it'll help my channel grow. And if my channel grows, it'll help other people realize that you want to ask people, these instructors, hey, do you believe that an instructor should share their P&L? Because we want to get that out there. We want them to share their P&L. We want real results. And I want to see their real results. And that is one of the, if not the main purpose of my channel, is to get other instructors out there to start sharing their P&L so they can be legit and stop stealing from people. Okay. I mean, it's happening. Oh, some more questions here, comments. What if you trade penny stocks? From Avery? No, penny stocks don't have any liquidity. They don't have any options on them. So you can't get options on penny stocks. So you can't even trade the safe wheel with it. And Martin says, hit the like button. Yes, I appreciate that, Martin. Thank you. And Xavier says, do you also live stream on Twitch? No, I don't know how to work Twitch. I think that's more of a gaming thing. But yeah, just here on YouTube. All right, in parting, I'd like to say this. If the P&L is not real, what else are they trying to conceal? I appreciate you guys, and I'll be back next week.